Hello everyone, welcome back to the Trading Room. I'm Shane Vernier, and this is going to be our psychology workshop. Unfortunately, it looks like we have a very bad connection with YouTube, but my internet's great. My platforms are all working great. Everything's good on my end. This is definitely a server error with YouTube, which is where we run our live streams from. I see everything's moving very slow from the live chat to the video itself is glitchy. And I don't know that we're going to be able to get this done today. When we're this choppy and scratchy, it's really difficult for us to get any kind of flow or any kind of rhythm on the live stream. So I do apologize for the technical issues. I can see right now I'm sort of watching the replay coming across YouTube, and it just isn't good. We've got a tremendous number of dropped frames. We've got a really slow connection between my OBS and the YouTube server, and it just doesn't even look like it's going to work. So I can try one more time, trying to figure out how to exactly. To me, like we're going to be in big trouble here. Yeah, it's very choppy. So, I sort of did the best I could on this. My apologies for the tech. I mean, it just is what it is. I mean, we can go ahead and just sort of do a radio show, it feels like today. But I'm going to go through, and we have a lot planned too. It's unfortunate that this isn't working correctly because we have an absolute lot to go over today. There's breaking news right now that could potentially crash our markets. Now, we've got a key level, 45,000s in play for the Dow. And right now, I'm just really frustrated with our connection. It's not very good. It's not very good at all. So that's too bad. We put a lot of preparation into this stream. All right, let's go ahead and let it rip and see exactly what we've got going here. Key level, I want to get right out to price action here. 45,000 is the key for the Dow. The Dow's up a little bit today, 136. If you guys remember this trade idea from a few weeks back, that was absolutely money in the bank. We talked about selling right in front of 45,000, and it was just an absolute fantastic trade, a nice banger there, and easily this one hit our profit target easily. You'll see our high right there was only about 45.23, so it only went about 23 points over 45, and then got really nailed down. About 200 or 300 points. That's a big time trade. That's a big time counter trend scalp, and one that I hope everybody got. That was a good one. Actually, I don't hope. I'm confident everybody got that. That was a pretty darn good sell. If you want to go ahead and just break this down to maybe a 30-minute chart, you can see exactly how this trade right there. There it is. Back on the 23rd, which was 2 days ago, but there it is. Absolutely beautiful. Hit that 45,000 came off big. So we're definitely not doing well here. We're reconnected now, but our bits per second is really low. So you can see that we're having some technical issues here. It's not my computer and it's not my internet. Okay, now we've got a good connection, supposedly 61,062 kilobytes per second. All right, so now we're up and rolling here. You guys should be able to hear me. This will pick up. It looks like our connection has improved dramatically, which is fantastic. Good for OBS, good for YouTube. In any case, we did this on a live stream yesterday. This XRP got up and running, and we were ready to rock with really a support buy from about 3, and it was absolutely fantastic. That 3 area treated us very well. If you go back down to the daily, you can see exactly what we got. We got a nice little spike low there, and then a big bounce. So something like that was pretty good. I like that a lot. I think that you got a great trade there on the XRP, and you got another great trade on the US 30. If you didn't take any other trades all week long, you had a great opportunity there, and really a great way to make a little bit of money. So I want to welcome everybody to the room here. It looks like we're up and rolling with a decent connection now. My apologies, guys. Sometimes tech just does not cooperate. Bobby Bob, good to see you. Bobby, Ralph H, No Donation Friday. Absolutely. We're going to talk some psychology today. We're also going to talk a little bit about any questions you may have, and also gold. I'll cover gold. We've also got some key economic events that came during the U.S. early session, and we've also got a statement out of Trump that's absolutely unbelievable. I hear you. The volume's down. Or what we're looking at here is something like this. Let me go ahead and just double check my properties. Something happened. Absolutely something happened. How about that? Can you hear me now? I mean, this is an absolute. What's going on with OBS? That's what I want to know. Then what did I just get hacked? Somebody in my account trading for me? I hope everything's up good now. I mean, if we're running smooth and you can hear me good, just give me a thumbs up. I apologize for the lack of whatever technology, I guess. All right, loud and clear. Thank you, Steve Francis. Okay, guys, let's get down to business. I got a few questions here. Much better, thank you. I don't know what happened, honestly. I have my same settings every day. I know exactly what we're doing here. We've done this 1,000 times, probably 2,000 times by now, but we're up and rolling now and ready to roll. So with a bit of luck, our connection will hold out. All right, guys, I got a great question here to Gordon Williams asking me a good one here. I want to get in there. Okay, I'm only trading Forex and I'm a full-time trader, just beginning. I get up at 6 a.m. Central Time. Okay, so that's about 7 Eastern. That's about 5 a.m. my time. Okay, how do you find the right pairs to trade that day? Using 15-minute charts but get stopped out a lot. Well, the first thing you got to remember, Gordon, is when you're on real short time frames, 15-minute charts, 5-minute charts, 1-minute charts, you're going to get stopped out. That's sort of the nature of the beast. You're going to go down to those low time frames, and you're going to end up probably getting chopped out of a lot of trades. So that's the first thing I would say. So getting stopped out a lot on a 15-minute chart, you're probably taking a lot of trades as well. So you hope that you don't hope, but you're confident that your winning trades will outweigh your losers, even if you are getting stopped out a lot. So that's the first thing. That's the nature of the beast there on the 15-minute chart. Now, as far as how do I know what trades, what pairs to trade that day? I'm a hybrid trader. So I'm looking at my economic calendar. I'm looking at things that may drive the market, and then I'm going to trade those pairs accordingly. So if we had some news out from the United States, I'd be looking probably at the U.S. dollar, look across the majors. If we had news out of Japan, maybe if that was an active one, you could definitely be looking to trade there. There's also a tool we have on the website here at How to Trade. It's called a heat map, a currency heat map. And what that heat map does is it shows you just in a color-coded context exactly which pairs are moving and which pairs aren't. So I would recommend checking out a heat map. That's something that could really help you just to find out which ones are on the move. If you're trading a 15-minute chart, if that's your bread and butter and that's what you like to do, that's fantastic. You're trading during a period of time that is during that London-U.S. overlap, so you should be good to go as far as liquidity goes and market depth. So that's not necessarily a bad idea. Your timing's pretty good. As far as figuring out which pairs to trade, that heat map can really help you. I personally just sort of, I'm so old. I'm so old. I was calling me a boomer here earlier. I mean, I'm so old that I just take a look at my board. I've got all my majors right there, and I immediately know which ones are in play and which ones aren't just by taking a look at the daily move. So something like that can also help you as well. But I do recommend that heat map. The heat map is a great place to begin if you're interested in maybe using one of the tools on the How to Trade website. You just go to Tools. There in your left-hand column, it's a little wrench and a screwdriver. Click on that, go down to Currency Heat Map, and that'll get you up and going. Good to see you, Gordon. Welcome. Let's see, Greg Goforth Boomer from Oklahoma just got back from your neck of the woods. Got to figure out how to move up there. You know, Greg, everybody's moving up here. Everybody's moving up here. When I was a kid in the construction industry, when I was in high school, I was a high school kid. We'd go fishing on the river. Bitterroot River is what I grew up fishing. I don't know if you were over in the Bitterroot, Greg, but that's the river I fished, and we fished it all the time. And you would go out on a boat, a raft, and you wouldn't see anybody all day long. And now it's bumper boats. There's so many guides working it, and I've really watched the state in general just explode, and the number of people that come here. Now, can you stay? It's hard. I mean, there's not much industry up here. Most people that are coming here either work remotely like I do, or they're pensioners and retirees. So right now it takes a lot of money to move to Montana. Things have got very expensive. I wish they would have got expensive about 15 years ago when I had a stack of houses to sell and couldn't unload them. I mean, that's pretty much the nature of the beast. All right, let me see. Gordon, okay, I'm having trouble picking the right Forex pairs to trade each day. I get up at 6. Okay, I hope that helps you, Gordon. I trade full-time 926 EMA. All right, right on. Great. There's nothing wrong with trade 926 MAs. Any moving averages you want to trade, crossovers can work. You just got to know when to trade them, and it looks like your trading day. If I was trading crossovers, guys, on 15-minute and short time frames, Forex pairs, London-New York session. London-New York overlap, excuse me. So you got that London session, and then as soon as the New York session opens, I would go probably an hour before the New York Open, 6:30, about 8:30 a.m. Eastern, 6:30 my time. That'll be 7:30 for you, Gordon. And what you'd look at is trade right until that Europe close, that London close, and then get up and going. Tina Shane, good to see you, Tina. Good, just good. Now, I fixed the sound. I did the best I could. I didn't even see it turned down over there. It's unbelievable. I never turn it down. I always have it maxed. So good to see. Let me see. Son Goku, hello, all is good now. All right, what website is it, Gordon? It's howtotrade.com. I'll just go ahead and type it in there. And this is a good day to take any questions you guys have. If you have any questions at all, just be sure to ask me. That's the link. Go ahead and give that a click. And we've got a currency heat map over there. Okay, guys, we got a lot to cover here, so I want to go ahead and get up and rolling. Today is going to be a psychology workshop, but I do want to hit on some current events and a few things that happened earlier today that we need to be aware of. So let's get up and rolling here. Once again, my apologies for the tech issues. It really throws me off my game, and I feel bad because I know you showed up ready to go, and I'm always ready to go when it's time for us to get going, and nothing worse than tech issues. Boy, that bums me out. But in any case, we're up and rolling now, so here we go. All right, welcome to the Switch Markets community, guys. You know the drill. If you're looking for a broker and you're an international client, check out Switch. They've got you covered. If you don't know exactly where to do business and you're a U.S. customer, go on over to How to Trade, send me a private message, and I'll be sure to get right back to you with a couple of recommendations. Oanda is typically one that we've worked with in the past and that we recommend for Forex trading here in the United States. If you're trading futures, I got a whole bunch of brokers that I've worked with. I can tell you exactly what my experience is. Week 30 today was all about durable goods. Sort of rare that we get a big time news item on a really a Friday afternoon, or excuse me, a Friday morning that's not an NFP. Usually it's always just NFP. That's what Fridays are for, is non-farm payrolls. We're going to be doing non-farm payrolls here again relatively soon. You see core durable goods was really sort of the highlight, the silver lining, but the real bad one was durable goods orders, negative 9.3% beneath, actually a little bit better than expected. We expected 10.4%, and we got 9.3 negative after an upwardly revised 16.5. This is all tariff madness. I wouldn't get too carried away with the dramatic shift in durable goods. If this trend develops and extends into the next couple of durable goods orders, be very, very careful. That means we're going into a recession. Remember what durable goods are. They're things that take a little while to pay off. So you're talking about buying refrigerators, your appliances, snow blowers. Where I'm from, you need a snow blower. I have a snow shovel, but most of the neighbors here have snow blowers. Things like that, big lawnmowers, anything you would finance and pay off over time typically is a durable good. So you're thinking, just like I said, refrigerators, ranges, big time appliances. Those are durable goods. Now, as far as core durable goods is all of that, but they stripped out something called aircraft. So aircraft clearly, and we're talking planes and automobiles and things as well, but the aircraft is stripped out of the core durable goods, and you can see right there probably a big contract didn't come through, and that's why you saw the big downturn there in durable goods. So don't get too carried away with those numbers. The markets aren't pricing them at all. I'll show you what the markets are pricing, but this right here, interesting. Durable goods orders declined 9.3% month over month to 311 billion, reversing an upwardly revised 16.5% jump compared to forecasts of a bigger slide. All right, so what is the reason for the biggest decline was seen in orders for transport equipment? There you go. So probably a bunch of airline. They probably canceled some airline orders. Trump has always done that in the past. He's not afraid to just cut those big companies off at the drop of a hat, whether that's good or bad. And this right here shows you really the big decline. So what I would say is this. You have a period of relatively flat durable goods orders. They were saying that the economy was relatively strong there during that period. Maybe it was, maybe it wasn't. You saw a big bump in durable goods back in March, and that was ahead of the tariffs. And then you saw a downturn, and then you saw a big bump, and now you got a downturn. This is going to be life under the Trump administration and tariffs. That's what it's going to be. It's going to be up and down for durable goods, and it's going to be an interesting time to try to figure out how to be an economist and predict what's happening in the U.S. economy. No question about it. I'm going to show you something right here that is a big deal, though. You know, and we talked a lot about the U.S. 30 being just huge as far as what we need to do to trade it effectively. I thought selling 45 was beautiful. Well, we're looking really at the same type of thing here for your gold. We're looking for the same type of thing here for gold. And, essentially what we've got here is a log jam. And they say it's a log jam, and maybe it is, maybe it's not. I will tell you this right now. We're trading sideways. This is a weekly chart. Just like we sold right here, right at 45, right back here. Beautiful trade, by the way. What do you think the game plan is for gold? We're probably looking to sell 3,500 again before we get the breakout. That's absolutely huge. So I would be watching gold very closely. If we do get that rally up to 3,500, you're probably going to see a short-term pullback. Now, is it certain that 3,500 is the top of this thing? No, it's not. It's not certain, not even close. So what we have to do here is be smart about what we're doing. We have to say, hey, what should our game plan be? Do I want to buy or do I want to sell? I don't really want to do anything with gold right now. In my view, the last 3 weeks have just been a killing field. We saw a nice big rally there, but then a reversal back down into this pennant. That's why playing breakouts on pennants, you need something to close. You need to close up here. Right there, you got faked out. You didn't get stopped out, but you got faked out. This is tough trading, guys. I know everybody in here wants to trade gold, and you want to make a lot of money doing it, and I understand. I really do. I'm a big gold futures fan, but look at this. I mean, this is just really difficult to trade. It just is. You broke up out of there. It looked like we were going to get that big move, that big run, and then what happened? We topped out right around about 34.39, 34.40, and then reversed back down to 33.33. So if you were going to maybe make a trade or think about making a trade, I would really just go right back to my monthlies. And I know that's a challenge to do because that's such a huge wave, but I don't really know that we can trade this successfully. I mean, everybody's getting chopped up. The longs are getting chopped up. The shorts are getting chopped up. It's really hard. And so what you have to do is just sort of game plan and wait. For me, I've got 3,500 sells on the board. I have no problem selling up there at the all-time high. And if you do get a pullback, 3,130, somewhere down there. But it's got to move, guys. Gold's got to move, or else we got a real problem here trying to pick a direction in a market that's incredibly bullish. And there are market drivers there. But you guys know what I'm going to say. The market doesn't have to move, and it's moving sideways. You can get chopped up in a heartbeat in this type of market dynamic. So I did want to cover gold here. Let's see. We got another question. Bobby Bob. Good to see you, Bobby. Hi, Coach. Kindly include CFD and futures trading in next week's session. Thanks in advance. Yeah, I mean, it's going to be a bit more of a challenge for me to really break down the pros and the cons of each. I can tell you right off the top of my head, CFDs are pretty much the international standard by trading most of things like oil, even gold to a certain extent, individual stocks, indices. Typically, a lot of folks love trading those CFDs because you get the big leverage and you have market access to everything pretty much. Futures contracts, you can trade almost everything on a futures contract, but you don't get near the variety that you do with CFDs. Now, here's the kicker. In the United States, you can't trade CFDs. It's illegal, contract for difference. Basically, the function is very much the same as a futures contract and a CFD contract, except for a couple key differences. Number one, futures contracts go through an exchange. They go through the CME, which owns the NYMEX, and also the CBOT and the NYBOT. They conglomerated all those things into the CME group. All those trades, every single one of them, goes through the exchange. They're exchange traded. They're certified at a clearinghouse. So I know for a fact every one of those trades has been cataloged, and I can go back, I can pull a number on one of my trades and go look exactly what happened. They have records of it. Okay, that's an amazing feat. I mean, the computing power has to be just immense to catalog all that. The difference between that and CFDs is CFDs are an OTC market. That means when you trade a CFD, you're dealing you're dealing directly with liquidity providers through your introductory brokerage, and nothing is cleared through the exchange. Nothing's cleared. So the prices on CFDs can be suspect. The spreads on CFDs can be suspect, but they give you great market access to anything. So if they're worth trading, CFDs, yeah, they are. They give you an incredible amount of opportunities that I don't have just trading futures. However, if I was looking to trade size, very big size, large size, I would be looking at futures markets just because I believe there's an added degree of security there with the exchange in play. And the spreads typically aren't an issue. If you're trading something real low liquidity, it is, but the bid asks typically in a futures contract are very, very, very tight. All right. Geez, our tech issues set us back about 10 minutes here. All right. This is the key market driver for this weekend. I can't believe that Trump said this today. Absolutely can't believe it. Trump says, I will give you a list of Epstein associates amid furor, and I haven't thought about a Ghislaine Maxwell pardon. Okay, all of that's fine. I'm not into the scandal. Here's what we need to know. Here's what Trump said. You should focus on Bill Clinton. You should focus on the president of Harvard, the former president of Harvard, Larry Summers. You should focus on some of the hedge fund guys. I'll give you a list. Unbelievable. What happens if 3 or 4 hedge fund guys, big names in the industry, what happens if they're indicted under an Epstein probe? It means that you're going to see a change in leadership at the top of some of the biggest firms in the world. That's what it means. And that will send absolute ripples through our markets. There's no question about it. That was one of the reasons why Trump didn't want to release any of the Epstein documents, among other things. God only knows why, but that was one of the big arguments. It's like, hey, listen, some of the people on this list, it's going to send shockwaves through our markets. Get ready. If they release a list and it has some of the biggest names in finance and hedge fund managers, what do you think the first thing just normal clients are going to do with their money in a fund that's associated with somebody that's running it or a management team that's running it that's affiliated with Epstein? What do you think clients are going to do? What do you think firms are going to do? What do you think individual banks, regional banks are going to do? Those hedge funds are going to be ostracized. And if they're some of the biggest in the world, which many of us believe, what about BlackRock? What if BlackRock shows up on that list? They're going to have to start liquidating assets, and they're going to have a change of leadership. Toot sweet. It's going to be a public relations nightmare. Get ready for some real turbulent times. If, in fact, that comes to fruition, which I'm not sure that it will, get ready and buckle up, because that right there is what I would call a class 5 market mover. I mean, we talk about 3 and 4 star economic events, and we're over talking about durable goods. None of that will mean anything if the biggest names in finance go down. None of it will mean anything. So be ready, guys. Be ready for that. And you know what happens. News always breaks over the weekend. You know, I'd be darned if I was taking home really anything long or short right now. That's a potentially explosive news cycle that will bring the markets to their collective knees. It really will, depending on whose name's involved. I'm not going to speculate. Don't know who. Yeah, absolutely, Gordon. They're all going to sell. They're all going to sell. People are going to sell everything. And we'll just wait and see. I won't even speculate on the potential, but that could be one of the biggest market drivers ever. All right, guys, let's talk psychology here. Let's get into our workshop. I know that it ran long. I wanted to get started on this early because we had so much to cover, but here's where we're at. So let's go ahead and go forward with it. A lot of these concepts that I'm going to talk about today, I covered back in the old days over on Forex Signals TV. I know a lot of you are watching on Forex Signals right now, but we made some videos here, Trading Psychology 101. This is our Trading Psychology 101 series. I got 4 videos there that show you exactly, some of the biggest pitfalls. Do you have a losing mindset? That's absolutely imperative. That's a good one. These don't have really any views to speak of. I mean, some of you have seen them, some of you haven't, most of you haven't. But Trading Psychology, Conquer Revenge Trading Strategy, how to make winning trading decisions, and how to avoid over leveraging. So you've got some real good stuff here that can help you really overcome, at least identify some of the real challenges that we have in the trading environment. So, when we talk about psychology, you guys have seen these slides a million times, those of you that have watched me. I'm going to definitely take a look at, probably refreshing these. But my week's always a game plan. On Monday, I'm game planning. I'm not going into a whole Tuesday, Wednesday, Thursday. I'm trading hard, trying to hit my weekly P&L and make my money. And then Friday, I'm throttling down. I'm going no donation, putting half of my money away, getting ready to come back and go to work on Monday. That's absolutely important. You understand that trading is about momentum. It's about getting the ball rolling, which can be hard. A lot of us, get stuck in not being able to get much of anywhere for a long time. And then when we finally get it rolling, the tendency is not to really pile on and leverage up and really make all the money that you can. And then lastly, the last phase is when Friday comes around at the end of the week or the end of the month or the end of the year, then we are really put to an incredible psychological question. Do we try for more, or are we happy with what we got? So my weekly game plan really gets us through that each and every week. And that's why I stress those things. I probably talk about them a little bit too much, but your psychology will dictate your momentum in the market, and it will dictate your career. It's absolutely important that you understand that what you have between your ears is going to dictate your career. I don't care if you're an automated trader, automated trading EAs. I know there's some of you out there, some of you that are incredibly successful, and you're thinking, man, why do I need to know psychology? Because when you automate and you have a system, an EA, something that's really working for you, you've got to be able to know when you have to update that EA, when to turn that EA on, and when to turn it off. And it all revolves around having a clear mental mindset, being able to see the game exactly for what it is, be able to risk your assets in the hopes, or excuse me, not the hopes, in the anticipation of reaching your financial goals. That's what psychology is. Trading psychology is all about that. Now, unfortunately, or fortunately, we're human beings. Life will get in the way of your trading. I'm going to tell you some stories, or I can tell you some stories if you want to hear them, about how life's gotten in the way of mine. Sometimes you get into a high-pressure situation in life, be it a family issue, be it a substance issue, be it just a money issue, be it a stress issue. Those things all destroy your trading, and you have to understand that it's not your fault. That stuff's not your fault. It's a function of your brain's chemistry being a human being. That's all it is. It's your nature. Understand that you're a human. Okay, we're not AI. We're not robots. You're a human. And being a human, we all have certain tendencies. Those tendencies come from our very nature and our very being. I don't care who you are or where you're from. Maybe a little bit different for you, but the brain chemistry with trading is all the same. And we're going to go over the actual chemistry there. We're going to talk about how that's going to beat you trading-wise. And then we're going to talk about, give you some suggestions on how you can really come back and overcome these problems. The answer typically is very simple, overcoming these issues. And then we're going to talk about the impact of getting frustrated and anger. That's really all there is to it, guys. Let me see. John Gashu, I'm a beginner trying to understand everything. Yeah, you just got to take your time. You got to take your time. From Kenya, great to have you. We have a global community here. We've got folks from all over the world, that's for sure. Good to see you. Yes, sir. Welcome. All right, Ralph H. has a good question. I'm going to answer this question, and then we're going to go ahead and get on. We're going to finish up our psychology workshop, and then I'll take any questions you want at the end. Let me see. Ralph H., how do you determine your key levels of support and resistance? Fibonacci retracements? Very simple, guys. I'll just sort of brief you. Fibonacci retracements, most current spike to spike. That's going to be my support level in this case. Also, I'm looking at a 13-period EMA. Those levels, and also a Bollinger midpoint of my Bollinger Bands. Those are my support and resistance levels. Also key levels, like we saw in the US 30 right here, that 45,000 level, and like we were looking at in gold right up there at 3,500. I keep things extremely simple, Ralph. Fibonacci retracements, a 13-period EMA, and then also your Bollinger Bands. I don't trade the Bollinger Bands, the upper or the lower. I don't do that. But I do use that midpoint. The midpoint's very important, and the distance between my 13 EMA and the midpoint is very important to me. So I'm more than happy. I can go over that. I've shown that an awful lot on these live streams, but I can certainly do it. Thank you for the question, Ralph. Okay, let me see. Julio Martinez, Central America, right on. Greetings from Panama. Okay, I've been to Costa Rica. I was down in southern Costa Rica about a decade ago. Loved it. Went fishing out on the ocean. It was a lot of fun. Met a lot of nice folks. You guys have a beautiful country, beautiful part of the world down there, Costa Rica and Panama. Absolutely gorgeous. Great food, too. I enjoyed the food. Gordon, I'm just stopped out with a trailing stop. Ouch. It's all right. Stick with it. You'll be all right. Okay, guys. When we talk psychology, we start with brain chemistry. That we have to start with what exactly is going on in between our ears, our physiology, what's happening in our body that can actually skew our perception of the markets and undermine our performance. Here it is. Here's your AI overview. It boils down to two things, cortisol and dopamine. All right, what are those two things? Cortisol and dopamine are both hormones and neurotransmitters that play a significant role in the body's stress response and reward systems, respectively. Okay. Cortisol is primarily known as the body's stress hormone. It can indirectly affect dopamine levels and dopamine-related functions. Conversely, dopamine is a key player in motivation, pleasure, and reward. It can also influence cortisol and release under certain conditions. So what does all that mean? Let's make it easy. Cortisol stress. The stress of trading can be immense. It's one of the reasons why we talk about risk management. Risk management's huge. If you're trading sizes you can afford, 1 to 3 to 5% of your total risk capital in any given trade, you're going to find your stress levels and your cortisol is going to be a lot lower. Dopamine, euphoria, that's the other end of it. That's when we start looking at our charts going, oh, I just want to trade. I want to get in there and feel. I want to feel what it's like when that hits my profit target. I want to feel it when I get a profit. I want to feel that rush. Dopamine is just as dangerous as cortisol. Both of them lead to 3 problems. 3 trade-related problems that will destroy any trader. I don't care how good or bad you are. I don't care how experienced, how long you've been in the game. These 3 problems will destroy you if you let them. And their roots are cortisol and dopamine. Now, a couple of things before we move on from the hormone talk. These essentially are the chemistry. This is what's happening in your brain. When you have a cortisol dump, you're under a tremendous amount of stress. Now, it could be from anything. Could be from anything. Could be family issues. Could be lifestyle issues. Could be substances. Don't forget, drugs and alcohol boost your cortisol up. Now, sure, typically you get that euphoria from the use of the substances, but then they dump the cortisol on you when you're coming down off of the substances. Now, believe me, listen, I've been known to have a pint or two. I'm not going to sit here and lie to anybody. I'll have a few pints. I'll have maybe a few drinks here and there, but it's very, very important from my own personal beats over the years that if you're into that, you don't show up to trade hungover. You don't show up to trade if you're going through any kind of withdrawal, whether it's alcohol, whether it's food. Try not eating for a couple days. You know what that does to your cortisol? Spikes your stress. Your body starts to panic saying, hey, you got to eat. So what we need to do here is build an even keel psychology. And it all starts with managing these 2 hormones. Now, the dopamine. The dopamine is definitely a huge driver. It's exactly what these cell phones do. It's what social media is all about. Empires have built on harnessing the dopamine in our brains and using it against us, getting us to buy things, getting us to spend time doing things. The markets are like that. The markets can hook you in and suck you in, and the reward and the feeling you get after a winning trade, it can be fantastic. I don't want you to lose that. I don't want you to lose that reward system. I want you to always remember going, man, I love to trade. It's so much better winning than losing. But here's where we run into problem with the dopamine end of it. We start to need that dopamine. We start to need that euphoria, that happiness that comes on after a winning trade. And what do you think that's going to do? It's going to make us take a bunch of trades we don't need to take. It's going to keep us in the markets when we shouldn't be in the markets. So recognize what each one of these things can do. Cortisol, stress will break you down to nothing. Physically, it'll break your body down to nothing. You'll develop ulcers. You'll have all sorts of health problems when the stress is high enough for long enough. It will literally rewire your brain and the way you think. It's a form of PTSD. Believe me, it's trauma. You have to figure out a way to keep your stress low. The number one way you do that is through risk management. Don't bet the house on anything. Don't bet the cars on anything. Don't bet money that you don't have. Don't put pressure on your relationships, marriages, your better half, your partner. Don't put pressure on it. You can do all of that by just managing your risk. Keep things small. Build over time until you're playing at a level that you can sustain. If you do that, the stress isn't even there. Believe me, I used to be a riverboat gambler. I mean, I was there taking big positions, and that was my thing, and I loved doing it. Why was I doing it? Because I hit a few of them, and the dopamine was like, wow, that felt great. I want to do it again. Markets aren't like that. You cannot operate like that, or you will not make it over time. All right, guys, your brain chemistry. If everybody understands dopamine, cortisol, we're going to talk about how to manage those things in just a second. Here's the big problems, guys. 3 major trade-related problems that your market psychology will give you, that dopamine and cortisol will give you. The first one's market paralysis. Now, what do you think market paralysis would be a result of? Losing, negative reinforcement. Those stress levels start to rise. That cortisol starts hitting your brain, and you're nervous about everything. No matter how perfect a trade is, you don't want it. A great example would be this XRP trade. Let's say we just took a big loss, or we took a couple big losses in a row, and I'm sitting there going, okay, I don't feel very good. I don't know. Ripple's in an absolute downtrend. My level's telling me to trade it. All right, I have a big zone right here, a nice this trade. Think about this. Theoretically, this trade took 6 weeks to set up for this to get a nice run and then a pull back to my level. And I'm sitting there and I identified it perfectly and I saw the trade perfectly. We've got our key level at 3. We've got 38% right there at 2.99. What do you think happens when you have paralysis? You second guess yourself and you go, I can't do it. I don't want to take the trade. It's probably a loser. I've been losing. So that's a form of having a negative mindset brought on by the cortisol dump. Paralysis. Big problem, guys. If you have a system and a strategy, your psychology needs to allow you to engage in those trades and execute those trades flawlessly. It has to. There can be no conflict in your trading. If you don't like your strategy, get another strategy. But when your strategy tells you to trade and there's no economic events and it's all systems go, you've got to take it. You've got to take it. You owe it to yourself to take it, because I'm telling you right now, as sure as I'm sitting here, I would say 8 out of 10 of those trades that you decide to pass on that have set up beautifully, they're going to win. And then that's going to take you even deeper in the hole, saying, oh God, I just missed that. I should have made that money and I didn't get it. Now what do I do? And you even go more and more and more on tilt. Market paralysis is a bad one, guys. I see it a lot. I dealt with it myself. I remember losing and just being so stressed out, not being able to think straight. And the trades would come my way just like a fastball right down the middle. I mean, just beautiful trades, and I wouldn't take them. And I wouldn't take them because I was scared to lose. Market paralysis brought on by the stress of losing. It's bad. Second one's hopeless trading. Hopeless trading is when you don't believe you can win. You believe the market's against you. The world's against you. It's going to come get you. This is hopeless. This is hopeless. I can't do it. Every time I trade, I lose. Do you know how many times I've heard that in the last 4 years working with traders? They say it as a joke. A lot of times it's just a real flippant joke going, oh, well, the Euro USD went up because I sold it. The market's out to get me. If you believe that, quit right now. Hopeless trading can be brought on by the euphoria, the dopamine, or the cortisol. The dopamine could get you to a place where you take a few big wins and you're riding high, and then you start losing and you say, what's the point? I'm never going to get up that high again. I'm never going to win those trades again. Not like that. Hopeless trading is when your chemistry's off. There's either a tremendous amount of stress brought on by repeated losing, and you're getting buried financially and buried under whatever circumstances you're under, and then you become hopeless. The dopamine, the other end, you go on a great big huge winning streak, you're living life, it's great, and then you lose a few and you say, oh, I'm never going to be able to sustain this. I'm never going to get back to where I was. If you're a hopeless trader, and I mean this, and this is nothing personal against any of you, all right? This is nothing personal. If you're truly a hopeless trader, in every trade you place, you believe you're going to lose and you don't think you can win, quit right now. Leave right now. Leave the stream. Quit trading. Get out of the markets. Withdraw your money and go do something else, because this game can take you down to nothing over time if you let it. And if you're hopeless, you're never getting up. Once you're down, you're never getting up if you're hopeless. You've got to have a positive expectation for every trade. It's called a positive expectancy. I call it positive expectation. You got to be positive every single time you take a trade, or else don't take it. Or else just don't take the trade. It's that simple. Don't be hopeless. Understand that every time you trade, there's a reason for it. Either your technicals lined up, or you got a great fundamental read, or your system's saying it, or your EA's saying it, or whatever. Take the trade. Take the trade. In every trade you take, expect to win it. And if you don't win it, and you're not going to win them all, by the way, and if you don't win it, you manage your loss, you learn as much as you possibly can from it, and you move on to the next one. But the next trade you take, you expect to win. If you're a hopeless trader, quit right now. I'm going to save you a lot of time and a lot of money. Last problem here is addictive trading. Addictive trading is all dopamine. All dopamine. It's when you get that dopamine drip and you are hooked on the rush. And there's a lot of folks out there. And listen, I have nothing against gamblers. I am a gambler. I'll go down and throw money down on sporting events. I've been known to go to Vegas and play blackjack and roulette and all of it. Place to shoot some dice. I've done it. I am a gambler. That's what I am. But there's a difference between being a responsible gambler that says, okay, I got 500, that's going to be what I wager, and we're going to do that. And then the other end of the spectrum is the folks, the men and women that just cannot stop gambling, where they'll pump every bit of money, every bit of credit card, they'll sell the cars, the house, all of it, just to get in there. And the money has nothing to do with why they're trading. They're addicted. They're addicted to that dopamine drop, that drop on your brain where you get that big win, or you get that blackjack, or you just won a big sports bet and you just got, you hit the 21. Hey, I got blackjack, a time and a half to one, and you run the big stack of chips up and you get into that rush, that dopamine drip, that dump. If you're an addictive trader, understand that you can overcome these things. You can beat it. The number one thing most people say if you have an addictive personality is not to trade. I don't believe that. I sort of have an addictive personality. The things that I do in my own personal life, I go hard at. If we go to the gym, we go hard. If I go on vacation, I go hard. When I trade, I go hard. If we're going to write something, we apply ourselves. That's just my personality, though. And a lot of folks say, man, you got the wrong kind of personality to be in the markets. I go, no. Out of that addictive personality, you can develop some really great habits. Get addicted to your process. Understand what it takes to be a winner, and just get hooked on it, saying, man, okay, how was my outcome today? It wasn't that great. Did I stick to my routine? Did I stick to my regimen? Was I ready to trade? Physically, did I feel good? Did I manage my stress levels? Did I feel great doing what I was doing? Yes. If you have all those things, the money will come. You will be able to make money in this market. So addictive trading, if you see it getting off the rails, and my rule is this, if you see trading being a negative influence on your life, if you don't have the money you need to survive, if you're destroying relationships around you, if you're temperamental, and it's all a function of addictive trading, you probably need to walk away from the markets. And there's no shame in it. But understand that even if you are sort of predisposed to being not necessarily an addict, but sort of addictive or OCD, and you're always busy mentally, that's a great thing for traders. Just manage your risk. Manage your risk. Fall in love, get addicted to a positive process, and you can have a chance. You can really have a chance. So I did want to say that. A lot of people say, oh, I'm an addict, I'm a trading junkie, I'm this, that. No, don't worry about that. It's okay to enjoy trading. Manage your risk, though. And if in fact, trading starts negatively influencing your life, then you got to get out. You got to get out of the market at least for a while and slow down. So how do you overcome all these problems? It doesn't really help me pointing this out. The first thing that you got to do is you've got to control these hormones. Stress. For me, personally, I'll tell you exactly how I manage stress. Proper risk management, 1 to 5% on any given trade. You'll sleep at night and you'll be just fine. Number 2, exercise. Understand the role cortisol plays in your body and how it can be a physical detractor from performance. When you get stressed out, a lot of times you lose a lot of weight. At least in the past for me, I drink just extraordinary amounts of coffee, and I just am basically a stress case. How do you overcome that? Exercise. Limit your trading hours. Don't sit here for 24 hours. Limit it to 3 hours. Limit it to 4 hours. Limit it to 2 hours. Get outside. Do your best to get out, get in the outdoors. Enjoy nature. You know, my wife's a big fan. She says you got to ground yourself every day. She walks around barefoot on the lawn for an hour. There's nothing wrong with that, whatever it takes. But you got to get those stress levels down. The last thing that you need to do is sleep too. Now, it's going to be different for everybody. Sleep, some folks got to sleep 8. Some folks got to sleep 10. Some folks sleep about 5. I get about 5 a night. Not bad during the week, about 5 a night. And I get by pretty well on that with decent energy levels. Remember, you've got to get rest. You got to get away from the markets. Those ways you can manage your cortisol, and it'll take care of those problems. It'll take care of that. You'll have a much better mental outlook on life, and you'll be able to trade much, much better. Now, dopamine. Dopamine's a little bit more difficult. If you find yourself getting swept up in the euphoria, the first thing you've got to do is probably slow down and step away from the markets. One of the guys that I traded with back in the old days, first prop firm that I went to work for was Top Step, and that was back in about 2011, 2012. There was a gentleman over there, John Hoagland, who was the veteran trader. I believe he's still there. And the guy was an old pit trader, a fantastic, just a wealth of knowledge about the markets, understood a lot about being a trader. He lived it his whole life. And one of the things that I remember him telling me, he said, hey, listen, some of my worst days were after some of my best days. And after having a huge winning day in the pit, back in the pit days, he goes, I would take a few days off. I would come back later. Because the dopamine, the euphoria, the idea that you're untouchable and that you want to get back in there and says, hey, listen, I got this beat. I can take trades all day long and be fine. Doesn't work like that. So to manage your dopamine, you definitely, the same things apply. Try to get sleep. Exercise is a big one. Watch your diet. Maybe cut back on the sugars a little bit. Maybe don't get too wired up on the caffeine, but also just step away from the market and let that rush, let that dopamine level go down. Get away from the computers. You know, go for a walk, go for a drive, visit family and friends. You manage those two hormones, you're going to be fine. All right, we got one last topic to talk about, psychology, and then we're going to kick off here. Let me see if Son Goku and beating yourself after Captain Hindsight pays you a visit. Don't do that. Hindsight's 2020, and I'm nearly going blind. I mean, come on. Everybody in life about hindsight. It's a great point. If I had $1 for every time people showed up and said, well, I wouldn't have done that. Well, I wouldn't have done that. Well, I wouldn't have done that. I would have taken the money, or I wouldn't have let that ride, or I wouldn't have done that. I would be a very, very rich person. I've been told that more times than I can count. And I'm telling you that when it comes to, if you have anybody in your life telling you, I told you so all the time, I told you that, you shouldn't have done that, I told you that, they're second guessing your decision making. I recommend, if they're a family member, you still love them. There's nothing wrong with them. Inherently, they're trying to help you by trying to discourage you from making bad decisions, but they're only bad decisions if they lose. It's only a bad decision if you lose money. I remember one time I bet, actually it was last January, I bet a bunch of money on the Georgia Bulldogs to beat Notre Dame in the college football playoff here in the United States. If you're in the U.S. and you watch college football, then you know. I had a stack of money on Georgia. Loved the defense. I loved them playing down south. I didn't think much of Notre Dame. I didn't think they were going to compete. And I lost. And I couldn't believe the people coming out of the woodwork to tell me. I mean, everybody, friends, family, they go, why'd you bet on Georgia? Why'd you bet on Georgia? And I go, well, you guys didn't know before the game, did you? So remember, you're the man or the woman in the arena when you trade. You're in the arena. That's what matters. My problem is missing out. Gordon, yeah, a paralysis. Paralysis can be a big deal. Get your strategy. Get your times you're going to trade. Stick to it and do the best you can executing when you trade per your strategy. All right. Let me see. I got one more topic, Bobby Bob, and then let's see. Yeah, we'll go ahead and Bobby Bob. Wow, kind words, Bobby. Shane, I truly look forward to the Friday psychology sessions. They're always eye-opening and thought-provoking. Thank you for pouring so much into them. Fridays with you are always a breakthrough moment for me. Deeply appreciated. Thank you, Bobby. I appreciate you showing up every day. You've been coming to these live streams every day for a long time. Keep building your skill set, and always think about how you approach this market for you. Remember, we're not trading really for anybody else. We're trading for ourselves. We want to reach our financial goals and be who we want to be in life, and we're going to use the markets to do just that. And if we're strong mentally, that's a big time part of it. All right, guys, one last thing. Anger costs money. Anger costs money. The best traders are even keeled. That means they don't get too high and they don't get too low. They're not a slave to the cortisol. They're not a slave to the euphoria, the dopamine. All right, take note of these two characteristics. Describe you, address them, and overcome. If you're triggered easily, if anger distracts you easily from the task at hand, it leads to revenge trading. You're gonna try to get your money back immediately because you're gonna bow your neck and try to fight back. You're aggressive, all right, and it leads to a defeatist attitude, 100%. If you're triggered easily, that means if the little things get under your skin, like if you're sitting there watching this live stream and you hate my sweatshirt and go, God, I hate Shane. I hate his sweatshirt. I'm tired of listening to him. All right. I respect where you're coming from. I do. I get it, man. Hey, listen, I have my days where I'm triggered easily. And on those days, I got to step away from the market. Have to do it. And a lot of times those things will come from your personal life. A lot of times those things will come, like I said, from substances. If you're, whatever you may be using, alcohol, testosterone's a big one. I know a lot of folks that are sort of amateur bodybuilders or aspiring bodybuilders that also trade. And, the testosterone can make you incredibly aggressive. And those aggressive traders typically have, I will tell you, when I was young, when I first started trading, when I lost, my initial instinct was to bow my neck and get tough and get in there and start trading again and get my money back and then some. And I will tell you that it didn't work. And the reason why it didn't work is because when I was losing, I didn't understand that I wasn't doing things the way that I needed to do them. I was making mistakes. I wasn't trading well. And if I wasn't trading well, I had a real challenge in front of me because why? I was trading more. So let's get this straight. You're going to get triggered. You're going to get tough with the market and you're going to go in there and bully the market. And when you're losing, you're going to start trading more? Should be the exact opposite. So what's the end game of being triggered easily and going down the revenge trading rabbit hole? The defeatist attitude. Remember our defeatist trader? Oh, woe is me. I'm never going to win. That's what happens because think about what you're doing if you're triggered and you want to fight the market. Think about what you're doing. You're bowing your neck. You're muscling up. You're saying, okay, I've got money and I'm going to go in there and I'm going to get my money back and then some. When that doesn't work, you've assigned a personal feeling. You've assigned your personal worth, your self-esteem has just been assigned to your performance in the market. You cannot do that. Well, that market just beat me. Woe is me. I can't do it. That's the wrong attitude to have. And that typically happens with folks that take this personally and want to get in there and try to beat the market up when there's just no reason for it. Let the market come to you. Nice and even keel. We're not too high and we're not too low. Second thing I want to touch on here, I've mentioned it before in this live stream, is substance abuse. Over the course of working here at How to Trade and now with Switch and, what we've done with Forex Signals TV, I've come across some traders that had substance abuse issues. Now, that's none of my business. It's different for everybody. Some folks can go have 5 or 6 pints and wake up the next day and be just fine, fresh as a daisy. If that's you, great. Some folks can't. Some folks can't turn it off. So that's why on the slide I say excessive use of alcohol and drugs. Some people, they need the testosterone therapy to be healthy. Some people don't. Some people are just taking steroids and lifting a lot of weights and being jacked up. I get it. The alcohol is a big one, though, especially here in the United States and in Europe. A lot of folks, it's a big part of their life. And if you can manage it and it's not hurting your performance, then that's fine. But remember what alcohol does to your cortisol. As soon as you come off the alcohol, the cortisol spikes in your brain. That puts you in an immediate position of stress. And I don't know many people that thrive under excessively stressful conditions. Lead to an unstable mentality, and it's always in the drugs, of course. I don't have to say it about heavy drugs or anything like that. I mean, if you're on drugs, you may be able to trade for a while, but typically what happens is that lifestyle will get the better of you, especially as demanding as the markets are. So the best thing to do is to stay within your means, live a lifestyle you can manage. Don't get overextended, not just financially, but don't overextend yourself health-wise. You've got to get rest. You've got to eat right. You've got to try to be as healthy as you can be, whatever that is. So maybe you need a little alcohol every night to calm down and go into that relaxation state. That's fine. Nobody's saying, you don't have to walk the straight edge lifestyle. You don't have to do that. But you do need to be able to manage it and understand that if your performance does start to suffer and you feel that cortisol, that stress state all the time, really take a look at what you're taking in. And listen, it's I'm not just talking about hard drugs or Jack Daniels or beers or anything like that. I'm talking about this stuff right here, coffee. Hey, I've done a lot to really try to bring my caffeine way down. And the reason why is because I was drinking 4 and 5 cups a day, big cups, the pretty stiff coffee. And I saw myself, getting into that caffeine mode. And then all of a sudden, what was I doing in the afternoon before the close? I was sucking down an energy drink. The caffeine was starting to take over, and it was hurting my performance. I was jittery. I was making mistakes. It wasn't me. And that's the biggest thing you need to do is just whatever it may be, you got to really manage those things, because that can easily put you on tilt or in a compromised emotional state. Typically will lead to anger at the end of the day. At least for me, it did. And it sparks the emotional component. You got to make sure that you're not overly emotional in the market. Remember, don't take any of it personally. You can't take any of it personally. It's just the market, guys. It's just money. It's just business. Yeah, you want to win. Yeah, you want to succeed. But if you don't take it personally. Don't take it personally. All right, last thing I'm going to say about psychology, and then we're just going to leave it at this. There are times in life when you should not trade. If you're coming off a major tragedy, if you're going through a big move in life, like if you're moving cities or moving house or something like that, if you're going through a divorce or a breakup, those are times when you probably need to step away from the market. At least step away for a few days and say, okay, I need a deep breath and I need to be sure that I'm grounded and even keel before I get back into the market. That's imperative. I've been through couple of those things. I moved a lot. I sort of got a new rule when we were moving around. I said, man, I'm not going to trade for a while. This is a brand new environment. I'm uncomfortable. I don't feel good. I'm going to wait, get settled in, and then trade. That's a very common one, people that are moving. Absolutely. The other one's personal tragedy, deaths in the family, things like that, deaths of loved ones. I had to shut it down for a long time, a few years back, after suffering a major tragedy. And it was probably the best thing I ever did, because when I came back to the markets, I was ready to go and I wasn't compromised any longer. So if you're going through some real business or you're going through stuff, I know we've had traders in the past that really frequent, viewers of our live streams here that were battling serious health issues. If you don't feel well, you don't trade. If you're sick, if you get the flu, you can't sit here, and be less than and expect it to work. Now, if you're managing an automated system or signals or something, okay, you could probably get away with doing that. But if you're in this game and you're trying to apply a system discretionarily or manually, you need to be on your game and be ready to go. So I would definitely make sure that you feel good when you trade. And if you go through any sort of personal tragedy, I step away, and I hate to say it, but it's going to happen. As we move forward in life, that's sort of what life is. Things are taken from you. That's just the way it goes. It's not easy. It's not easy to deal with, but if you trade in an emotionally compromised state, I almost guarantee you lose. And I almost guarantee those two hormones we talked about, what were they? Cortisol and dopamine. Both of those will attack you at the same time. And then it's just a matter of time before you lose your money. I don't want you guys to lose. I want you to win. That's true. Let me see, Gordon Williams. My stroke in March, that's what brought me to day trading. Well, that's fantastic too. Day trading is a great way where if you're compromised and you can't really do some of the things you used to do, day trading is a great way to try to make some money and make a living from the comfort of your own home in a situation where perhaps it's not as physically demanding as some other endeavors. I worked construction forever. My dad was a builder his whole life. He's got a back surgery, 2 hips, and 12 stints. That's the way it is. The body does take a toll. But the thing, Gordon, is after you got a little bit of recovery under your belt, then you dive into the markets. And when you start to feel a little bit better, and I could see where that would be a real rewarding journey, each day getting stronger, each day starting to learn more about the markets, each day moving forward. That's what it's all about. Approach the market from a position of strength, psychological strength. Yeah, I hear you, Gordon. I don't know that I can either. I've been in front of the screen for so long. I was looking around. I was thinking, man, what would it be like to do a morning commute? I haven't commuted in, 10 years at least. Yeah, Crazy stuff, guys. And remember, one last thing, everything is different for everybody. So what works for me may not work for you. What works for you may not work for me. Remember, we're all individuals. The goal is the same, to make money, and there's only one way you can do that, and that's to approach the market from a position of strength. Get your money in order, understand your resources, understand your psychology, have a solid strategy, and get in there and really play the game on your terms. That's it. All right, guys, I'm going to go ahead and sign off here. We got one more. Deeply appreciated. Yeah, absolutely right. Thank you, Bobby Bob. All right, guys. That's about it for our Friday psychology session. My apologies for the technical issues at the very beginning. That's incredibly frustrating because I know we lost a good portion of our audience there, but that's okay. If you have any questions at all, be sure to go on over to howtotrade.com. Send me a private message. I'll be sure to get back to you in short order. If you do have any sort of psychological issues, any sort of life questions from a trading perspective, I'm more than happy to sort of tell you, my experience and what I've been through. And maybe some of those insights can help. Maybe they won't. I mean, it's like I said, we're all different. But feel free to reach out to me, private message over at How to Trade. We will have the stream schedule posted probably in the next hour or so. And I already had a trade idea out earlier today. We'll go ahead and recap that one Monday, but it looks like a pretty good one. Essentially, we're short on that that Euro Great Britain pound pair we covered yesterday. It's going to be a pretty good trade. We'll cover that Monday on the week ahead. We also got the FOMC live next week, so I'm going to have Jay Powell, and we're going to go ahead and talk to Jay Powell a little bit. It's going to be a lot of fun. That's going to be a banger on Wednesday. Don't miss that. That'll be our featured event. And I haven't looked at the economic calendar yet, but I believe next Friday is the first Friday of August. And if that is the case, then you know what that means. NFP already again. So I'm looking forward to doing all this stuff. Let me see. Athi, one last comment here. Athi, good to see you guys. I'm terrible with names, so if I mispronounce it, no disrespect intended. All right. Hey, man, I've been following you here on YouTube. Great insight and advice in these markets. Thank you. I would like to trade full-time, but I do need more of these psychology-based videos. Well, these are a couple pretty good ones to start with over here on the Switch Markets TV channel. I made these 4. Nobody really watched them. These actually were a module in our trading academy that we had inside the trading room for a while, and then I said, let's release them to the public and see if anybody wants to. But that was last year we released them. They're pretty good videos, cover some of the things we talked about today in a more structured fashion, but those can help you. As far as trading psychology goes, yeah, it's a big one. Let me see. Okello, I still have a very big problem, mostly when I'm trading lower time frames like the 5 minutes. The biggest challenge, guys, well, there's a lot of big challenges in trading, but the biggest challenge really is understanding, and I know a lot of you are going to disagree with me here, but it's okay. Understanding that a chart is not a chart is not a chart. When I started with the 7 V-Bar trading group, one of my partners sat there and told me that he didn't care what it was on what time frame. A chart's a chart's a chart. I can trade it. Now, it is possible to trade short time frames successfully, but what we have to remember is if we're trading a 5-minute chart or a 1-minute chart, you're going to take a tremendous number of trades. You're going to lose a lot and you're going to win a lot. So understand that on a 5-minute chart, if you're taking 50 or 60 trades a week, yeah, it is possible for you to lose 5 in a row, 6 in a row. It is possible. So if you're going to trade short time frames, see that as a really see your performance as in the aggregate. Don't get caught up in, man, I've been losing a lot lately. Yeah, no kidding. You're taking a lot of trades. Take them all. Be consistent. Do the best you can with it. And after a period of time of you being consistent, if your performance still isn't where it needs to be, then you got to figure out a different way to trade. That's just the way it is. We have to make money. That's just it. So the first thing I would recommend, Okello, if you're having a big problem on short time frames, trade longer time frames and see if it works. Cut your leverage down and try maybe instead of a 5-minute, go to a 30-minute. See if you can make it work. Something to think about there. Son Goku, what helped me a lot is having someone to trade with and chat about trades and setups on Discord. Having a second pair of eyes helps a lot. Yeah, a lot of traders really like to interact with other traders. And in our remote environments, I think that's probably a great thing. That's probably the way to do it. And the reason why is because we're lonely. It's a lonely endeavor. I get lonely here all by myself. I like talking to you guys every day. That's one of the highlights of my day. But, the work and everything adds up. You get sort of No one in this town trades, in this entire town. So it's not like I can go down to the pub there and we can talk about our trades all day. That's why Discord and things like that are great. A community of traders, and that's what we're trying to build here with the Switch Markets How to Trade community. Eventually, what our vision is, and it's down the line a bit, but what our vision is a place where traders can come and they can talk trading and they can trade. It's absolutely huge. Price action is king. There you go, Eli. Absolutely, price action is king. That's because trading is boring. Good trading is boring, Eli. Good trading is boring. Absolutely right. Let me see. Gordon Williams, go Mavericks. Absolutely. All right, you guys have a fantastic weekend. I'm going to sign off. Ralph H., thank you. Bobby Bob, always a pleasure, Bobby. The schedule for next week will be up and rolling here in about, 30 minutes or an hour. And then it's shoulder day. I got to go work shoulders, see if we can get a good workout in and have a great weekend. If you're struggling in the markets, reach out. I'll help you any way that I can. That's the idea, is to get everybody up and running. Other than that, have a fantastic weekend. Keep an eye on that news feed. That Trump statement's a potential bombshell. So be ready for anything come Monday. All right, everybody, have a fantastic trading day. The rest of it, trade the action well, and we'll talk soon. See you.